Hello guys, welcome back to my channel. My name is Nikhil and this is the chapter 9 part 2 of the Reject Poor Dad series. The sixth power says pay your brokers well. The power of good advice. I often see people posting a sign in front of their house that says for sale by owner, or I see on TV today many people claiming to be discount brokers. Marriage dad taught me to take the opposite tack. He believed in paying professionals well, and I have adopted that policy also. Today I have expensive attorneys, accountants, real estate brokers and stock brokers. Why? Because if and I do often mean if the people are professionals. The service should make you money, and the more money they make, the more money I make. We live in the information age. Information is priceless. A good broker should provide you the information as well as take the time to educate you. I have several brokers who are willing to do that for me. Some taught me when I had little to no money, and I'm still with them today. What I pay a broker is tiny in comparison with what kind of money I can make because of the information they provide. I love when my real estate broker or stock broker makes a lot of money because it usually means I made a lot of money. A good broker saves me time in addition to making me money. As when I bought the piece of vacant land for $9,000 and sold it immediately for over $25,000 so I could buy my Porsche quicker. The broker is your eyes and ears to the market. They are there every day, so I do not have to be. I would rather pay I would rather play golf. Also, people who sell their house on their own must not value their time much. Why would I want to save a few bucks when I could use that time to make more money or spend it with those I love? What I find funny is that so many poor and middle class people insist on tipping restaurant help 15 to 20% even for bad service and complain about paying a broker 3 to 7%. They enjoy tipping people in the expense column and stiffing people in the asset column. This is not financial intelligence. All brokers are not created equal. Unfortunately, most brokers are only salespeople. I would say the real estate salespeople are the worst. They sell, but they themselves own little or no real estate. There is a tremendous difference between a broker who sells house and a broker who sells investment. That is true for stock, bond, mutual fund and insurance brokers who call themselves financial planners. As in the fairy tale, you kiss a lot of frogs to find one prince. Just remember the old saying, never ask an encyclopedia salesperson if you need an encyclopedia. When I interview any paid professional, I first find out how much property or stocks they personally own and what percentage they pay in taxes. And that applies to my tax attorneys as well as my accountants. I have an accountant who minds her own business. Her profession is accounting, but her business is real estate. I used to have an accountant that was a small business accountant, but he had no real estate. I switched because we did not love the same business. Find a broker who has your best interests at heart. Many brokers will spend time educating you and they could be the first asset you find. Just be fair and most of them will be fair to you. If all you can think about is cutting their commissions, then why should they want to be around you? It's just simple logic. As I said earlier, one of the management skills is the management of the people. Many people only manage people they feel smarter than and they have power over, such as subordinates in a work situation. Many middle managers remain middle managers, willing to get promoted because they know how to work with the people below them, but not with the people above them. The real skill is to manage and pay well the people who are smarter than you in some technical area. That is why companies have a board of directors. You should have one too, and that is financial intelligence. The seventh power, which is be an Indian giver. This is the power of getting something for nothing. When the first white settlers came to America, they were taken aback by a cultural practice some American Indians had. For example, if a settler was cold, the Indian would give the person a blanket, mistaking it for mistaking it for a gift. The settler was often offended when the Indian asked for it back. The Indians also the Indians also got upset when they realized the settlers did not want to give it back. That is where the term Indian giver came from, a simple cultural misunderstanding. In the world of the asset column, being an Indian giver is vital to wealth. The sophisticated investor's first question is, how fast do I get my money back? They also want to know what they get for free, also called a piece of the action. That is why the ROI, or the return of and on investment, is so important. For example, I found a small condominium a few blocks from where I live that was in the foreclosure. The bank wanted $60,000 and I submitted a bid for $50,000, which they took, simply because along with my bid was a cashier's check for $50,000. They realized I was serious. Most investors would say, aren't you tying up a lot of cash? Would it not be better to get a loan on it? The answer is not in this case. My investment company uses this as a vacation rental in the winter months. When the snowbirds come to Arizona and rent it for $2,500 a month for 4 months out of the year. For rental during the off season, it rents for only $1,000 a month. I had my money back in about 3 years. Now I own this asset which pumps money out for me, month in and month out. The same is done with stocks. Frequently, my broker will call me and recommend I move a sizable amount of money into the stock of a company that he feels is just about to make a move that will add value to the stock, like announcing a new product. I will move my money in for a week or to a month while the stock moves up, then I pull my initial dollars amount out and stop worrying about the fluctuations of the market because my initial money is back and ready to work on another asset. So my money goes in and then it comes out, and then I own the assets that was actually technically free. True, I have lost money on many occasions, but I only play with the money I can afford to lose. I would say on an average 10 investments I hit home runs on 2 or 3, while 5 or 6 do nothing and I lose 1, 2 or 3, but I limit my losses to only the money I have in at that time. For people who hate risk, they put money in the bank, and in the long run, savings are better than no savings. But it takes a lot of time to get your money back, and in most instances, you don't get anything for free with it. They used to hand out toasters, but they rarely do that these days. On every one of the investments, there must be an upside, something for free, a condominium, a mini storage, a piece of free land, a house, stock shares, office building, and there must be limited risk or a low risk idea. There are books devoted entirely to this subject that I will not get into here. Ray Kroc of McDonald's fame sold hamburger franchises not because he loved hamburgers, but because he wanted the real estate under the franchise for free. So wise investors must look at more than ROI. It's the asset you get for free once you get your money back. That is financial intelligence. The eighth power is assets by luxuries. The power of focus. A friend's child has been developing a nasty habit of burning a hole in his pocket. Just 16, he naturally wanted his own car. The excuse: all his friends' parents gave their kids cars. The child wanted to go into his savings and use it for a down payment. That was when his father called me. Do you think I should let him do it, or should I just do as the other parents do and just buy him a car? To which I answered, it might relieve the pressure in the short term, but what you have taught him in the long run? I asked. Can you use this desire to own a car and inspire a son to learn something? Suddenly the lights went on, and he hurried home. 2 months later, I ran into my friend again. Does your son have his new car? I asked. No, he doesn't. But I went and handed him $3,000 for a car, and I told him to use my money instead of his college money. Well, that's generous of you, I said. Not really. The money came with a hitch. I took your advice of using his strong desire to buy a car and use that energy so he could learn something. So what was the hitch? I asked. Well, first we broke out your game again, cash flow. We played it and had a long discussion about the wise use of money. I then gave him a subscription to the Wall Street Journal and a few books on the stock market. Then what? I asked. What was the catch? I told him the $3,000 was his, but he could not directly buy a car with it. He could use it to pay and sell stocks, find his own stockbroker, and once he had made $6,000 with the $3,000, the money would be his for the car, and the $3,000 would go into his college fund. And what are the results? I asked. Well, he got lucky and he early in his trading, but lost all he had gained a few days later. Then he really got interested. Today, I would say he is down $2,000, but his interest is up. He had read all the books I bought him and is gone to the library to get more. He reads the Wall Street Journal voraciously, watching for indicators, and he watches CNBC instead of MTV. He's got only $1,000 left, but his interest and learning are sky high. He knows that if he loses that money, he works for 2 more years, but he does not seem to care. He even seems uninterested in getting a car because he's found a game that is more fun. What happens if he loses all the money? I asked. We will cross that bridge when we get to it. I would rather have him lose everything now rather than wait till he is our age to risk lose everything. And besides, that is the best $3,000 I've spent on his education. What he is learning will serve him for life, and he seems to have gained a new respect for the power of money. And I think he stopped the burning of holes in his pockets. As I said in the section, be yourself first. If a person cannot master the power of self discipline, it is the best not to try to get rich. For while the process of developing cash flow from an asset column in theory is easy, it is the mental fortitude of directing money that is hard. Due to external temptations, it is much easier in today's consumer world to simply blow it out of the expense column. Because of the weak mental fortitude, that money flows into the path of least resistance. That is the cause of poverty and financial struggle. I gave this numerical example of financial intelligence. In this case, my ability to direct money to make more money. If we gave 100 people $10,000 at the start of the year, I gave my opinion that at the end of the year, 80 80 would have nothing left. In fact, many would have created greater debt by making a down payment on a new car, refrigerator, TV, VCR, or a holiday. 16 would have increased that $10,000 by 5% to 10%. 4 would have increased it to $20,000 or into the millions. We go to the school to learn a profession so we can work for money. It is my opinion that it is also important to learn how to have money work for you. I love my luxuries as much as anyone else. The difference is some people buy the luxuries on credit. It's the keep up with the Joneses trap. When I wanted to buy a Porsche, the easy road would have been to call my banker and get a loan. Instead of choosing to focus in the liability column, I choose to focus in the asset column as a habit. I used my desire to consume to inspire and motivate my financial genius to invest. Too often today, we focus to borrowing money to get the things we want instead of focusing on creating money. One is easier in the short term but harder in the long term. It's a bad habit that we as individuals and as nation have gotten into. again I will repeat it, it's a bad habit that we as individuals and as a nation have gotten into. Remember, the easy road often becomes hard, and the hard road often becomes easy. The earlier you can train yourself and those you love to be masters of the money, the better. Money is a powerful force. Unfortunately, people use the power of money against them. If your financial intelligence is low, money will run all over you. It will be smarter than you. If money is smarter than you will work for it all your life. To be the master of money, you need to be smarter than it. Then money will do as it is told. It will obey you instead of being a slave to it. You will be the master of it. That is the financial intelligence. The ninth power is the need for heroes. The power of myth. When I was a kid, I greatly admired Willie Mays, Hank Aaron, Yogi Berra. They were my heroes. As a kid, playing little leagues, I wanted to be just like them. I treasured their basketball cards. I wanted to know everything about them. I knew the stats, the RBI, the eras, the batting averages, how much they got paid, and how they came up from the minors. I wanted to know everything because I wanted to be just like them. Every time, as a 9 or 10-year old kid, when I stepped up to a bat or played first base or catcher, I wasn't me. I was Yogi or Hank. It's one of the most powerful ways we learn that we often lose as adults. We lose our heroes. We lose our naivety. Today, I watch young kids playing basketball near my home. On the court, they are not like little Johnny, they are Michael Jordans. Sir Charles or Clyde. Copying or emulating heroes is the true power learning. And that is why when someone like OJ Simpson falls from grace, there is such a huge outcry. There is more than just a courtroom trial. It is the loss of a hero, someone people grew up with, looked up to, and wanted to be like. Suddenly, we need to get rid of ourselves of that person. I have new heroes as I grow older. I have golf heroes such as Peter Jascobeson, Fred Couples, and Tiger Woods. I copy their swings and do my best to read everything I can about them. I also have heroes such as Donald Trump, Warren Buffett, Peter Link, George Soros, and Jim Rogers. In my older years, I know the stats just like I knew the eras and RBI of my basketball heroes. I follow what Warren Buffett invests in and read anything I can about his point of view on the market. I read Peter Link book to understand how he chooses stock, and I read about Donald Trump trying to find out how he negotiates and puts deals together. Just as I was not me when I was up to the bat, when I'm in the market or I'm negotiating a deal, I'm subconsciously acting with the bravado of Trump. Or when analyzing a trend, I look it as a through Peter Lynch were doing it. By having heroes, we tap into a tremendous source of raw genius. But hero do not but heroes do more than simply inspire us. Heroes make things look easy. It's the making it look easy that convinces us to want to be just like them. If they can do it, so can I. When it comes to investing, too many people make it sound hard. Instead, find heroes who make it look easy. 10th one, teach and you shall receive. This is the 10th power, the last power. It says, teach and you shall receive. The power of giving. Both of my dads were teachers. My rich dad taught me a lesson I have carried all my life, and that was the necessity of being charitable or giving. My educated dad gave a lot by the way of time and knowledge, but almost never gave away money. As I said, he usually said that he would give when he had some extra money. Of course, there was rarely any extra. Marriage dad gave money as well as education. He believed firmly in dating. If you want something, you first need to give. He would always say when he was short of money, he simply gave money to his church or to his favorite charity. If I could leave one single idea with you, it is that idea. Whenever you feel short or in need of something, give what you want first and it will come back in buckets. That is true for money. A smile, love, friendship. I know it is often the last thing a person may want to do, but it has always worked for me. I just trust that the principle of reciprocity is true and I give what I want. I want money, so I give money and it comes back in multiples. I want sales, so I help someone else sell something and sales come for me. I want contacts and I help someone else get contacts and like magic contacts come to me. I heard a saying, I will repeat it again. I want contacts and I help someone else get contacts and like magic contacts come to me. I heard a saying years ago that went God does not need to receive but humans need to give. My rich dad would often say poor people are more greedy than the rich people. He would explain that if person was rich, that person was providing something that other people wanted. In my life, all over all these years, whenever I have felt needy or short of money or short of help, I simply went out or found in my heart what I wanted and decided to give it first. And when I gave, it always came back. It reminds me of the story of the guy sitting with firewood in his arms on a cold, freezing night and he is yelling at the pot bellied stove. When you give me some heat, then I will put some wood in. And when it comes to money, love, happiness, sales, and contacts, all one needs to remember is first to give what you want and it will come back in droves. Often, just the process of thinking of what I want and how could I give what I want to someone else breaks free a torrent of bounty. Whenever I feel that people aren't smiling at me, I simply begin smiling and saying hello. And like magic, there are suddenly more smiling people around me. It is true that your world is only a mirror of you. So that's why I say, teach and you shall receive. I have found that the more I sincerely teach those who want to learn, the more I learn. If you want to learn about money, teach it to someone else. A torrent of new ideas and finer distinctions will come in. There are times when I have given and nothing has come back, or what I have received is not what I wanted. But upon closer inspection and soul searching, I was often giving to receive in those instances instead of giving to give. My dad taught teachers and he became a master teacher. My rich dad always taught young people his way of doing business. In retrospect, it was their generosity with what they knew that made them smarter. There are powers in this world that are much smarter than we are. You can get there on your own, but it's easier with the help of the powers that be. All you need to be is generous with what you have, and the powers will be generous with you. Okay, this completes chapter 9, and I will see you guys in the chapter 10. It says, "Still want more?" Question mark. Here are some to dos.